This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. I'm John.
And I'm Mary. It is Monday, July 27th, 2026. We are your smart friends on the go. Let's get into today's news.
We begin with the Gist View. Today we are looking at the business of space. Amazon just filed a massive application with the FCC, that is the United States agency regulating communications. Amazon wants to launch over 5,000 satellites by 2028.
They call it Project Kuiper. The goal is to build a mobile space network in low Earth orbit, or LEO. This is a zone close to Earth that is perfect for beaming down fast internet. Amazon is going right after SpaceX. SpaceX currently dominates this market with its Starlink network. Bloomberg reports Starlink already has 9 million paid users.
But here is the core insight. The real barrier to entry in space isn't rocket science anymore. It is radio spectrum. To operate a space network legally, you need exclusive rights to specific radio frequencies.
Exactly, and spectrum is incredibly scarce. That is why Amazon just spent almost $12 billion to buy a company called Globalstar. They didn't buy it for the satellites. They bought it to capture Globalstar's spectrum rights.
So, who benefits here? In the short term, consumers do. Introducing a massive competitor will force Starlink to lower prices. But look at the resource flow. Amazon is buying up the limited spectrum to lock out smaller rivals.
Right. It forces a massive consolidation. The space infrastructure frontier is officially closed to startups. You cannot compete without sovereign-scale capital. The market is calcifying into a mega-cap duopoly. You either have $100 billion or you stay on the ground.
Let's move to the global overview. Speaking of space, NASA just scheduled 3 new spacewalks for August.
Astronauts will upgrade solar arrays on the International Space Station. It highlights a growing tension in resources. We are spending heavily to maintain ageing government-run outposts. Meanwhile, the actual architecture of space is rapidly shifting to commercial, private companies.
Back down on Earth, let's look at Venezuela. The country's trying to dig out from under massive debt. We are talking between $150 billion and $240 billion. That includes sovereign government debt plus money owed by PDVSA. That is Venezuela's state-owned oil and gas company.
Bloomberg reports Venezuela just hired Centerview Partners. They are a major New York investment bank. Their job is to restructure this debt, but the incentives are incredibly tangled. The lenders are a highly fragmented group.
You have private bondholders, you have companies holding arbitration awards, and you have powerful bilateral lenders, specifically China and Russia. Getting all these competing interests to agree on a payout plan will be a brutal fight.
Let's shift to the tech war. Shares of CXMT, a major Chinese semiconductor company, surged 500% today. The Wall Street Journal highlighted the jump.
This is a perfect example of unintended consequences. The United States placed strict export controls on technology going to China. The goal was to starve their chip industry.
But the resource flow just changed direction. It is like building a dam to stop a river. The water doesn't disappear, it pools up. United States policies essentially forced Chinese domestic capital to stay home. Now Chinese investors are fully underwriting their own domestic tech champions.
Turning now to the European perspective. We start with a major disruption in the Black Sea. Civilian shipping through Ukraine's maritime corridor has totally stopped.
According to the German broadcaster ZDF, Russian strikes sank a bulk carrier called the Golden Leo. Tragically, 10 seafarers were killed. The United Nations Security Council met today to address the shutdown.
The economic timing is terrible. We are in peak harvest season. Blocking this corridor threatens to spike global agricultural prices. It is a clear reminder of how regional conflicts act as choke points for the global food supply.
In business news, the European auto sector is feeling the squeeze. The German automaker Audi just downgraded its financial guidance for 2026.
The Wall Street Journal reports Audi lowered its revenue forecast to between 58 and 63 billion euros. First half deliveries dropped 7%.
The main culprit is China. European brands are rapidly losing ground to heavily subsidised Chinese competitors. At the same time, Europe is bracing for impact from the United States. A year ago, the European Union and the United States signed the Turnberry Framework to ease trade tensions.
But Euronews reports Brussels is now scrambling. They are trying to shield 150 billion euros worth of European goods from new United States tariffs. The transatlantic trade truce is looking very shaky. Still, Audi managed a 3.8% operating margin by using strict cost discipline. They are cutting budgets to survive the volume drop.
Finally, a big buyout in Ireland. The board of DCC, a Dublin-based energy group, recommended a massive takeover. Two United States private equity firms, KKR and Energy Capital Partners, offered £5.75 billion to buy the company.
But shareholders are pushing back. The Financial Times reports the offer is about £65 a share. Investors argue this deeply undervalues the company's long-term prospects.
Look at the power dynamics here. Capital is structurally migrating. High-value European public equities are being bought up on the cheap. The wealth is flowing across the Atlantic into American private ownership.
And that brings us to the sign-off. The temperature today is defined by high barriers and deep pockets. The entry fee for innovation is skyrocketing, whether you are beaming internet from orbit or manufacturing microchips. Meanwhile, global trade is navigating severe storms, from Black Sea grain blockades to transatlantic tariff threats. Across the board, deep pools of capital and tight supply chains are dictating who wins and who gets left behind.
Spot on. If you found today's breakdown useful, we would love for you to join our community. You can get the gist delivered for free to your inbox every single day.
Just tap the subscribe link right there in the show notes. No hassle, just the smartest news analysis waiting for you every morning. Thanks for listening, and we will see you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.